Now let us see in the range in which the currencies are expected to swing. Euro could swing from that of 1.06 to 1.10 level. Then in the case of GBP, it could come down to 1.24 and go up to 1.2850. Then in the case of yen, it could come down to 110.50 to 115 area. Then in the case of USDCHF, they could gain a little bit to 1.0050 and then come down to 0.9850. Then Canadian dollar is expected to make a come down, and it will just come down to 1.31 from that 1.3350 high they could show during this week. And Australian dollar from that of 0.7600, they are expected to gain to 79 level. Already they are shown 0.7600, even though the initial low was 76.11, they are just holding it here to gain during this week. So you find that currencies will be range bound again during this week, but initially they will make the slide and then rise and again slide. That sort of moves that they are expected to do during this particular week. Now let us do the market reading in order to find out how exactly the players are expected to make the moves. In the case of euro, they set 1.0660, that is not been breached, whereas euro high has been breached 1.0681. So 1.0679 was the initial high. They just breached the high and holding high. So they are holding above that of the initial high. So they could make an extended upward move for 2 hours and then start making the slide. Then in the case of GBP, 1.2531 is the low, which is not been breached. The high is 1.2556, which is also not breached. So the low and the high are intact. Then in the case of yen, 111.13, 111.50 are the lows and the highs. They are not breached the low or the high. Then CHF, 1.0011 is the low. They just breached, came down to 1.0008 and holding there. High is 1.0028. So they are likely to come down a little bit and hold before making a rise. Then Canadian dollar, 1.3299 is the low, 1.3328 is the high. They are not breached the low or the high. In Australian dollar, they just breached the low 76.11 and came down to 76.00 and holding there, and they could make an extended downward move for 2 hours and then start gaining it from that of the late Japanese session. Then 76.41 is the high, which has not been breached. So all along you come across that euro is in positive territory. GBP is in positive territory now nominally, but Australian dollar is in the negative territory. As far as the denominator currencies are concerned, USD and USDCHF are in negative territory, but USDCAD is in positive territory. So you find that the majors are showing the USD weakening move nominally, but the commodities are showing the USD gaining move. This is a contrarian move. They are doing it in the low volume condition in the market in order to induce the traders to commit positions in the crosses as well. And later on, they will try to increase the volatility. So only in the case of euro and USDCHF, they just breached the high and the low, and not a very significant move is seen so far. So the recommended trade for today, 3rd of April, you can buy near that of the low in the case of euro, 1.0660, and keep the hedge order 1.0630 and take profit at 1.0710 during that of the gain. Then in the case of GBP, 1.2530 near that of the low, you can keep a buy limit order, and exit could be 1.2590 during that of the European session, and sell stop could be at 1.2490. In the case of Australian dollar, we can take a buy straight and keep 30 pips below the hedge order, and in 76.70 we could be able to exit out of the position during the European session. So these things you can try it in a demo trading platform. So now at the moment they are doing the weak beginning false move in the case of Aussie, and you know the commodity pairs, they lead the rally and lag behind, so which has already shown the US dollar gaining move. Slowly you will find Euro and GBP will also show the US dollar gaining move, and later on during the European session onward, during the European session they could start gaining more and more during the US session. Then these are all the session timings. So we have the daylight saving system is on in Europe as well as US. So the Japanese session gets over by 7 GMT. 7 to 7:30 GMT is the gap time before the start of the European session. 7:30 to 13 GMT is the European session. 13 to 13:30 GMT is the gap time before the start of the US session. 13:30 to 20:30 is the US session. 20:30 to 0030 GMT of the next day is the gap time before the start of the next day Japanese session. This is how you come across the market is 24 hours. We need to use the GMT time frame to refer the market so that wherever we are, we will be in a position to refer the market at the appropriate time. If we try to use our local time, I may say that it is during my morning hours it is like this, and somebody in US might say that during my night hours it is like this. Instead, if you use one single universal time, namely the Greenwich Meridian time or GMT, then all will be referring to the same time and the tick, so that there won't be any confusion when you talk in terms of GMT time frame. Then also you have to follow that once the spread becomes more than 40 pips between the high and the low, then we can commit positions in such currencies. Here in the case of Australian dollar, now it has become 41 pips. So that way you can commit positions. And wherever it is not more than 40 pips, you avoid taking position. When the low is formed, new low is formed and not cut for 30 minutes, then closely you can take a buy position there. So if you've got any question, you can ask me. I'll be willing to answer those questions.